Easy.
All right. Well, hello everyone that is joining us or watching this later. For those of you that don't know us, I'm Rhea Barrow, real estate broker and owner of Realty.
Yep. Ben Musselman, loan officer, Fairway Mortgage Group.
So we're just going to talk about home buying basics today. The number one thing that I feel like people always ask is, what is it going to cost? And what we'll be talking about today mostly is just primary residence. So not an investment property or anything like that, but we will do that later. So cost-wise, obviously you hear a lot about 20% down.
Yes.
And people wondering, is that what they need? Why is that what they might need? So I thought you could kind of explain the different loans, what that does mean, and what the minimums are.
Yeah. Hopefully better than ChatGPT as well.
Yeah. Get it from the source.
Yeah, exactly. So as much as I've been banging the drum, you don't need to put 20% down. 20% is back in the day was a really, really, really good idea for a down payment because mortgage insurance was very expensive. But we'll dive into all that kind of stuff. But basically, for most mortgage programs, if you're a first-time home buyer, you're looking at 3% down. It's kind of the standard for a conventional to 5% down. Different mortgage products, and this is where it gets confusing, VA, USDA allows for 0 down, and then FHA is kind of about the same as 3%, so it's at 3.5% down. Those are kind of the minimums, and there can be benefits to put additional down, but sometimes it's better in this day and age to put the minimum down because you want some of that money to still in your pocket.
Yeah.
So,
So then you can use the extra money to buy down your interest rate, or if you do pay more down up front, then your monthly payment might be lower. So it's really getting a good loan officer to help you navigate based on how much money you have, how much money you should be putting down, so that you have a good amount still in your pocket to use for things like that.
Yeah, so everything in the mortgage world is all about question and answer and figuring out the ultimate solution that you're looking for as a home buyer. So sometimes it makes a lot more sense to use more of your money, sometimes it makes more sense to use less of your money. And that's really all unique up to your situation. So that's where it's just having a real conversation so that I or the loan officer you're working with can structure it correctly. That's going to work the best for you.
Yeah. And if you work with an awesome realtor like me or anyone else at Realty, through the negotiations, we obviously try to get you some more money back in your pocket, whether we're asking the seller to pay for closing costs or dropping the purchase price based on things that come up. You know, you don't want to go into it assuming that that's going to happen. You want to be comfortable up front with your offer, but just know if you have a good realtor, that's what they should be trying to do for you too.
And you guys are great at that. Like you, especially your team, you're just giving seller concessions, being able to negotiate. It's amazing. It's always impressive.
Thanks.
Yeah.
So obviously down payment is a big part of it.
Absolutely.
Other costs that come with purchasing a home are inspection, something that I highly recommend.
Yes.
You know, it's a huge purchase. It's a lot of money you're putting towards it. You want to look under the hood and see what's going on with things.
Yep.
So a home inspection itself is typically around $500, and you just pay that directly to the inspector. Other things that you can add on, depending on the property, is getting a sewer scope, because those repairs are super expensive.
Been there. $15,000 later.
Yep, that's usually what they're around. You're lucky if it's $7,000.
Yeah.
And that's rare. That's like a little maybe crack that has to be fixed. But yeah, I've seen them as high as, I know one of our agents had one that was like $30,000 this year. And she got the sellers to cover it. So shout out to Bailey.
Wow.
Because that's something they would have to disclose to the next buyer.
Yeah.
Because they know that that happens. So usually it's in their best interest to just fix it or negotiate with the buyer that they have.
Yeah.
So,
and you kind of need a working sewer.
You
kind of.
The last thing you want when you move into a house is your shit backing up into your basement.
Right.
Because that's something you need immediately to get fixed.
That's how I found out with the house that I had bought. Yep, a couple years into owning the house. Yep, that was not fun.
Comes right back up. And I mean, the sewer scope itself is usually around $250. So it's like, you either have the peace of mind that it's great, or you know what's going on with it.
Yep. And like you've seen so many houses now, you can probably recommend like, hey, when you should be looking at these additional pieces and the inspector that you guys use, you know, for everything too. So
yeah, if they have a record of a repair, obviously we take that into consideration and those types of things. But
or, as I've heard, 1950 St. Paul houses, which was what I had.
yeah,
Yeah.
Really anywhere in Minneapolis, St. Paul, the older homes.
Yep.
You want to be getting those checked out.
For sure.
On top of that, you know, if it has a chimney, you can inspect that. Those, if you do want to burn wood in your fireplace, that's expensive, and you want to make sure that's super safe because you don't want a fire in your house either.
Yeah.
Stucco, you know, there was a person in the 80s around the Twin Cities that was not doing stucco correctly, so he didn't put the moisture barrier between. So that means your house is like rotting.
Oh my God.
On the inside.
Yeah.
So that's a test that you can get. Again, that just depends on the property. Making sure you have someone who's helping you navigate that stuff. But those costs are all out of pocket and directly to the inspector. But you can expect, you know, at least $500 and then kind of up from there. What else comes with the cost? Appraisal. So
100%. Oftentimes confused with the inspection.
Yes.
So you always mention it when you're talking to your clients, and then usually the mortgage person is second in line. Usually we talk this the second time. So everyone always confuses, and I always say it's not an inspection, it's an appraisal. Inspection is there to protect you. Appraisal is really there to protect the lender. The investment of the mortgage and the property that you're buying is where the appraisal comes through. We do look at, as a mortgage company, right, the appraisal companies will look at the condition of the property to make sure it's health and safety. So you can actually habit the property, and we look at different things to make sure that's going to work. But primarily it's hey, is the value going to be there? That kind of stuff. And appraisals run anywhere from $500 to $800. And those are typically paid at closing. Some mortgage companies will ask you to pay that up front. Some mortgage companies will ask you to pay it on application.
Oh.
Yeah, we don't see it too often in the Twin Cities, but I do run across it. There's a couple of them out there, and they do it for whatever reasons they decide they want to do. But they'll charge an application fee, $500, $1,000, credit report fee, another $250 up front, and then they also will charge for the appraisal at the initial acceptance of a contract. So if you get an offer accepted, which is usually $700, $800, they'll charge you and come back. So those are a couple of things we can charge in the mortgage world. I've never done that in my career. I just don't feel that's good business. It just doesn't seem like the right way to do it. We just kind of absorb some of the costs if you don't buy a home, essentially.
Right. Yeah. And then on top of that, and like you said, that can be paid at closing. I do see some of my clients pay it when it's ordered.
Yep.
So is that an option always, or?
So it's up to so each branch of each company. So Fairway is an independent mortgage group. So we are one of the branches. So we've decided at our branch we just charge for the appraisal at closing.
Okay. Cool.
So that way, if everything kind of falls through, or if it doesn't work out for one reason or another, you're not already pot committed as much. So sometimes we'll work with you on that kind of stuff.
Yeah.
You know, if it doesn't come through with the appraisal.
Awesome. Well, that's a huge benefit, I would say,
Yeah.
to anybody. So.
Yeah, because we don't
Then
all.
Fairway?
Yeah, we can't ever guarantee the appraisal. Usually, you guys are really good at knowing, but things come up.
Yeah, totally. So then on top of that, you have your closing costs. So, you know, appraisal might be in that if you haven't paid it yet. Usually it's about 3 to 4% of the purchase price, maybe more.
Well,
depending.
it gets confusing. This is the hard part when we talk about the percentage.
Yeah.
Is the closing costs are pretty flat. It doesn't matter if you're buying $1 million house or a $200,000 house, with a couple of exceptions. So that it ends up being anywhere from maybe 1% to 6 or 7%. So if you're buying a $150,000 house, the appraisal costs the same. But
right.
Yeah, so it kind of depends.
And title fees are usually pretty
flat,
static.
Yeah.
But that's what the closing costs entail. So you're paying the title company to do their job, which is making sure that the deed is free and clear of any judgments and those types of things. They record everything so that the county knows the house is now yours. The lender fees, so there's some that come with that, and that's something that you want to be asking your lender up front what those are going to be.
$16.90 for Fairway.
There you go.
Yep.
And then your escrow. So maybe you can explain escrow.
Most confusing thing on the loan estimate package.
Yeah.
So that's like once you get an offer accepted and the lender sends out like our declaration of terms. So it's called a loan estimate. So escrow is basically, so you don't have to do it. Sometimes you have, sometimes you do. But basically what it is it's your monthly homeowner's insurance and property taxes required if you own a property to have both of those if you have a mortgage on them. And so we need to basically set money into a savings account with the lender so that way when your homeowner's insurance comes due at closing and then a year later, and when your property taxes come due typically every 6 months, so that's going to be up anywhere from 1 or 2 months of those up to 14 months of those. So just depending, we can get way more into it, but that's the conversation you should have with your mortgage loan officer where they talk and they say, hey, based on this closing date, this is why we are collecting these many months.
Yeah. And the loan estimate is super important to look at. Usually a lender can give you an example after you're pre-approved of like, if you purchase this, $400,000 house, here's what it'll look like. Depending on where it is, the property taxes will be different, obviously, and those types of things. It is just an estimate. But I saw one of my clients once, and this was probably 6 or 7 years ago, and there was $6,000 that I couldn't understand why it was that much more. And I told them that, and I said, you should switch lenders, because your lender can't explain why it's $6,000 more than what me as your realtor is used to seeing for a closing. And sure enough, they switched lenders, and this was before I knew that. But he would have done the same thing, and they saved like $6,000.
Yeah.
Just switching lenders. So it's super important to know what those fees are going to be. Have your realtor look at it so that they can give you their opinion on if that looks right, or if it does look like there's something that's wrong.
Yeah, and there's other fees, like say if you're getting an FHA mortgage, there's a funding fee, VA there's a funding fee, USDA there's a funding fee, so there's other costs that can be involved here in the mortgage world, but we don't want to talk about every little detail, that's more from the lender. But absolutely, you should look at your loan estimate, and the confusing thing is, and I talk about this in depth with all my clients, is there are so many different interest rate options you can pick from. Sometimes some people will just throw out one option and you're like, hey, I want a lower payment. So there's a little bit of there's definitely a direct correlation between additional cost, and interest rate. So if you can pay more to get a lower interest rate. So yeah, absolutely. So if you are looking for stuff like that, that's stuff that your loan officer should be asking. Like, hey, are you trying to get the lowest payment? And that's where sometimes we can have more closing costs to get you a better deal on the interest rate.
Yeah. And some buyers go into the market knowing that they need the seller to cover their closing costs because they only have so much cash to cover just the down payment. And that shouldn't deter you from trying to buy a home, because if you're working with a realtor that's advocating for you, then you go into the market knowing, okay, this is what my client needs. We have to ask for closing costs, so we're going to offer, this because of that. And you can, I've helped plenty of people purchase homes that needed to do that, and now they're homeowners. So don't want that to deter people. Obviously the costs add up, but it's historically one of the best investments you can make is purchasing 100%. Real estate.
Yep.
And there are programs available. Minnesota, I think, I'm biased because I live here, but I would say it's one of the better states based on other people I talk to around the country as far as programs that we create and that we have available for buyers. Typically they're for first-time home buyers. One of the bigger ones that got approved last year was 2 years ago. The first year was the first generation home buyer, and they were giving up to like $30,000 to help you purchase a home. So and forgivable, which is a big thing too, because that means you're not paying it back. So.
And there are programs like that available again, but they just have a little bit different specifics on qualification.
Yeah.
So I've got one right now that you can do up to $45,000.
Oh, wow.
Yeah, first time home buyer. But
Other things.
demographics are kind of part of that one. But
Sure.
absolutely, yeah. So the average person right now, there's quite a few people that do take advantage of down payment assistance. I worked a tremendous amount with it, whether you're doing a conventional, an FHA, VA, USDA mortgage. Typically, you do need to be a first-time home buyer, but you're absolutely correct. There are a couple programs in Minnesota where you can be a step up, so you're buying your second home. We just call it a step up because it's a second home, or second primary property, I should say, that you can absolutely qualify for down payment assistance. I have programs right now that get you $14,000. Sometimes you're gonna make a payment on it, sometimes you don't, depending on income. We have programs where you can get up to 5 to 6% of the purchase price to help cover closing costs. There's grant programs, like right now you can get a $4,000 grant up to $4,500 grant now. That's still ongoing. There's a ton of programs. There's a bunch.
Yeah, I mean, you want a lender who's gonna look for those for you if that's something that you're interested in, and someone that will look for you even if maybe it's not something you're asking. You know, just to see if based on your criteria you would qualify for anything. So.
Yeah. And if you can get an extra $4,000 just for free, I mean, it's why not?
Yeah.
Like, it's just kind of a no-brainer. So we look for those programs for all of our clients to really. Because buying a house is scary enough.
Mm-hmm.
Let's make it as bulletproof and as simple and the least amount of cost as possible.
Yeah, I agree. And as a realtor too, I stay apprised to all the programs that are out there. But working with your lender to help figure out if you do qualify for things like that. So, yeah, so that's mostly the cost, which obviously is a big part of it. We can talk a little bit about just kind of the process. So, I always recommend first thing is to meet a realtor. So that they can guide you from the very beginning. I meet with people that might want to buy in a year. But they want the information about the process. So that they can start to get ready, start to save up some more money maybe, or just plan for that. Some people need to move in 3 months, and that's, we can do that too. But it's never too soon to talk to a realtor, and then they'll connect you with lenders. If they are experienced realtors, they probably have some really great lender partners that they recommend. But then they're going to tell you, to start shopping for a home, you do need to get pre-approved.
Yes.
So then Ben can talk about what you need for that and kind of what effect it has on you when you do that and those types of things.
Yeah, of course. So pre-approval is so critical right now, and you can speak to this because you also sell houses, you don't just have home buyers, is you need to show that you are qualified to get a mortgage. If you're buying a house with cash, I would assume you're probably proof of funds. Same thing. So sellers, if you're selling your house, you'd want to make sure that people that are making offers on your house have verified.
Yes. I always call the lender that is on the pre-approval when I'm selling a house for someone and make sure that the pre-approval is valid.
Yeah.
That they've actually communicated with these clients.
That it's not a pre-qualification, which is basically, so pre-qualification versus pre-approval, real quick. We've looked at documents and we verified income, or pre-approval, or pre-qualification we haven't. So pre-approval we have, pre-qual we haven't. I only do pre-approvals. Just how we run our business. So basically the pre-approval, very simple, very easy process. So it's a mortgage application. It's encrypted, same 20 questions for everybody, 30 questions. You fill it out, we schedule a time to follow up, and then we just talk about it. We have to look at credit, so typically we do start with a soft credit check now. And so we look at really just a few things now. We just look at your credit, we look at your assets, we look at your income. That's about it, and you got to be 18 because you got to be able to sign legal documents. So that's about it, and then we just talk about it and really what is going to be best for you. So then I sort through 30, 40, 50, maybe 100 different mortgage programs. Maybe come down to 1 or 2 that we just talk about and recommend, and then we just go from there, and then give you, hey, this is what payments look like and down payment requirements, and then hand you back to the realtor to go shopping with this amazing, yes, less of the scary stuff, the dentist kind of thing. Back to the fun.
So then you have the pre-approval, and with my process with clients, then we meet back up and talk more about the criteria you're looking for. Usually I have a general idea, but then, what are your must-haves? What are your dreams?
Yeah.
And then we just start from there and start shopping and then find the right place and put in an offer.
And that's what the partnership also with the realtor and the loan officer is so important. Is like, say you're gonna go look at a house and you're like, hey, it just popped up, and we need to have a good line of dialogue so that we can support you in your journey, because it's time sensitive. Things come up. We need to be able to work as a cohesive team.
Yeah.
So that's why it's so important to have a great realtor and a great loan officer.
Yes.
So
Yeah.
if one person drops the ball, trust me, it definitely affects you as the buyer or the seller.
Yeah.
Yeah.
One thing that I've seen recently that happened to one of my clients last year who kind of shopped for their pre-approval on their own.
Mm-hmm.
And then I've heard in the industry that this has been happening more is kind of a bait and switch with interest rates with like online banks that are saying, hey, you can get this interest rate if you get a mortgage through us, and then you'll get all the way through and be under contract, and then they'll say, oh no, not that one, you actually didn't qualify with all those things, even though we told you the whole time that's what it was. And then you get down to closing and it's like, not actual closing, but close enough to it where then they realize, oh no, your interest rate's actually going to be this. And then you're like, well, I don't really want to switch lenders
Or it's too
now,
late.
or it is too late.
Yep, and you might lose the house and your earnest money.
And I feel like having someone local who knows the Minnesota market,
Yep.
who understands our contracts,
Yes.
which is, I will say as a realtor, it's up to the client who they want to use for funding.
100%.
But working with out-of-state lenders is horrific. Not only for me, but even I've watched my clients deal with where they're talking to 8 different people.
Yeah.
And there's someone new emailing them every time, and they don't know who to contact.
Yeah.
I try to. I'm like, who am I contacting now?
Yeah. Or they won't get back to you for like 2-3 days.
Yeah, and it's added stress that you don't need.
And you have a contract. Like a lot of people, even when I bought my first house, I understood it before I got into the mortgage industry. My realtor was great, my loan officer was great, that's the whole reason I got into the industry. But I didn't realize I had a contract. Like I knew it, but I didn't realize it. So then there's penalties if you go past like certain dates and you can't close.
Yeah.
So what I've always done with my business is it's got to be speed to respond with a quick communication, and it's got to be like honesty and truth. And like maybe I'm going to tell you something you don't like because it's the truth and it's how it's going to work. Regretfully in this industry, there can be, don't want to ever talk negatively about anyone else, but there's maybe not as good experiences. So, what we are trying to do in the mortgage world is I'm trying to take probably one of the most stressful, scary, largest financial decisions in your life and just boil it down to the simple decisions, and then just we go and we trust we get them done. So as a team here, we are closing on average 3 loans every business day of the whole year. So we do a ton of business. We can't do that much business unless we are straightforward, we're honest, and we close fast. Like we try to get things done. Yeah. So
I had someone ask me the other day, why does it take so long to close?
Yeah. Great question.
I know. Well, it's Joe.
Hey, great question, Joe. That's
and I
that's
said, I talked to him about underwriting, that type of thing, but maybe you can explain to people why there is that timeline of, some people can close really quickly if you have to, which I know you've done, but typically we go about 30 to 45 days out, and if you are using a program, you usually need a little more time, but maybe you can explain, what is happening in that time frame
100%.
that makes it be that way.
So different mortgages companies are set up different ways. So we here at our branch at Fairway, we only do mortgages, which kind of seems silly to say, but it's really the truth. And what we've really streamlined the process to be able to get it done in 12 to 14 days. So other companies, what they'll do is you've provided documentation up front, right, during the pre-approval, and then you get a contract in, and then you get more documentation, and the documentation then sits for a day or two, and then it gets passed to an underwriter, and an underwriter may take 3 to 5 business days, maybe longer, to actually review, where oftentimes our turn times, our underwriters are like a day. And then they give you like a conditional approval, and then they order an appraisal, and then so you see how I'm saying, and then, and then, and then.
Yeah, it's all steps.
It's all steps. So what we do is we do everything at once. So we'll go in and we'll go, everything here, we've got everything up front, perfect, okay, cool. Bam, here's everything, whole package to the underwriter. Appraisal's ordered right then and there. So we get everything done. We have relationships with our AMC, our appraisal companies, that we can make them go faster. They're gonna push to go faster. Same thing with our underwriters. So we wanna get done so far in advance, because we wanna make sure if there are gonna be any issues, we catch them in the first couple of days. That's the big thing. The worst thing you could ever see happen, and thankfully it's never happened to me, thank God, because I would be pulling hair out, is you're sitting at the closing table and you're waiting for a phone call from your loan officer to say it's okay to close. It happens more than you think. How much better is your life if you've got a 40-day contract and you get a phone call from your loan officer 10 days after you've got an accepted offer, and we go, it's all done.
Yeah.
Don't quit your job, don't do anything silly.
Yes.
And we'll see you in 30 days, 15 days when at the closing table.
Yeah.
Your life is so much better. You know you can pack, you can order the moving trucks, you can do all that kind of stuff. You know, so that's the idea.
Yeah.
Yeah.
And if you're like leasing a place, you have more confidence that you can say, hey, you know,
Yeah.
this is my last month, or
Yeah.
anything like that. But yeah, I've had some tough ones where it's closing table type of delays, and
And you haven't gotten any communication for a week, and then you get bad communication. Bad communication should be the first communication, like in this industry. So, not to scare you away, most of the times it goes through flawlessly. It's like 95% of the time. But we do all these things so quickly and so efficiently, and we give good pricing. We do all this stuff because we want it to be customer service. We want it to be available. Like, you call me on a Sunday, guess what? I answer my phone. Like, those are the things, because these are all time sensitive. This is stuff that needs to be done quickly.
And to that point, as far as not, quitting your job while you're under contract and that type of thing, early on in my career, and it was something that I did still say up front, but one of my clients, we were 2 weeks from closing, they wanted to go buy some new furniture.
Yep, the classic.
And they went and opened that furniture store credit card, and we had to delay closing 3 weeks.
Yes.
I mean, we could barely close at that point because that affects your credit.
Yep.
You just took out,
and your debt, so maybe you don't qualify for that mortgage at that interest rate, and we gotta scramble.
Yeah, big thing. I mean, when you're in the process, no matter what, I tell people, like, just pause on, don't go get a new car, don't get a new credit card, don't quit your job. I'm like, the day of closing, after you sign off, you can go do all those things.
Wait till the money's funded. Wait a day, then you're good. Then you can do whatever you want. Yes,
but
100%.
that's definitely something to kind of keep in mind. So if you do have any plans for those types of things, talking to your realtor and your lender, because we can be your team before you're even in the process.
100%.
We're here to help you navigate it if you need help working on your credit, so that you can get to that place. I know that you guys have programs for that.
A ton of credit improvement. That's where, when you're saying, hey, if you're a year out and you think you want to buy in a year, even a year out isn't the worst time to talk to a loan officer.
Yeah.
It really isn't, because what I can do or I can advise you on in a 3 to 6 month window could save you tens of thousands of dollars. Like, no joke.
Yeah.
Like, it's crazy what we can sometimes do. I've swung credit 100 points before in like a short amount of time, like 1 to 2 months.
Yeah.
So it's definitely doable. It's just, So usually what I recommend, if you're thinking, hey, I really want to buy a house in 3 to 4 months, that's when you talk to a loan officer.
Yeah.
Because then we can look at it. I use our tools to be able to get you in the best situation possible.
Yeah. Should we see it?
Yeah.
If
Oh
anyone's
God,
here,
we got
or if you have any
going.
questions,
Yeah.
you want to peek at it?
Sure. If you don't mind me looking at it. Oh.
Are we still live?
We got people. Go through it.
Oh.
Here, we're still live, and there's people on. So.
Is there any questions?
Watching. Oh, Courtney's on here. Hey, Courtney.
Well, does anyone have any questions before we
Yeah.
kind of sign off? We'll give you anyone a minute and see here.
Yes. And if you are watching this post, you can ask questions on your Facebook page.
Yeah. Well, and obviously you can contact either of us
Yeah.
at any point to talk.
Yeah, 100%. Yeah. And we're probably planning on doing another one.
Yeah, I mean, I like to do once a month.
Yeah, yeah. And
Just pop in next month. We'll do investment property, which I get a lot of questions about. I feel like a lot of people our age are, you know, they have the home, they have money, and they want to diversify a little bit. So talking about, you know, what that looks like. I have 2 rental properties myself, so I know the ins and outs of that.
Yes, you do. Yep.
But yeah, so that'll be our next one. But before, I'll just check again before we're done here and see if anyone.
And I'll just throw out a couple of things about investment properties from the mortgage side. Those are the most interesting ones because there's so many options out there. So pretty cool stuff with that stuff. And options, a lot of even realtors might not have heard of. So those are fun. Yeah. That's a fun one.
Yeah.
Yeah.
Well, I'll just pop here. But thank you guys for watching. And this will be posted, so if you know anyone that would want to watch it or want some more information, don't hesitate to reach out and have an awesome Wednesday.
Thank you for joining us, everybody. Appreciate you.